So, how did Uber's earnings report go?
Look what I found in my pocket! Look! A year's salary right here! What I call them? Fun coupons! See that? A fun coupon!
I'm only burning my half. All you care about is money. This town deserves a better class of criminal.
Oh. Ooh, that bad, huh?
Xbox, Twitter, Uber,
Postmates,
Netflix, MoviePass,
Google,
eBay,
DoorDash,
Apple, Amazon, Airbnb,
The Apptrepreneur. Hey everyone, this is Kevin the Apptrepreneur, and before we get started, I would like to thank everyone for their well wishes, their nice comments about my admission that I was struggling with severe depression. There will only be one video today because I am still very much struggling with it. However, I am pulling myself together. I'm getting this one out. And really, I did want to talk about this one because I almost said, I'm going to let this one go. It's just an earnings report. Why do I need to make a video about Uber losing another $3 billion? I didn't realize, oh my gosh, Uber has reported their absolute biggest loss yet. However, before we talk about that, let's have a word from our sponsors. Times are changing for gig workers and the gig economy, and there are a lot more gigs from a lot more companies than there used to be. That's why when people ask me where they can go to find resources for the gig economy, I recommend gigworker.com. At this site, you can see what other gig workers are doing and discover better opportunities from industries, companies, resources, and even a forum where you can talk with other people in the gig economy. Gigworker.com is a great resource site whether you work for Uber, Lyft, Postmates, DoorDash, TaxRabbit, Thumbtack, Upwork, whatever. There's a gig for you and there's a forum for you on gigworker.com. Gigworker.com for all your gigs. If you want my personal, honest opinion on why I think we're heading for another economic crash, it's because Wall Street, which used to be about two things, profitability and growth, has recently taken a new mantra with the tech companies like, hey, if you've got great growth but no profit, you can survive in our books. Or heck, even if you have a lot of profit but no growth, you can survive. But I've always thought it was kind of strange that a company like Amazon could be the tech darling for 20 years and never make money. That seems like a huge failure of a business, in my opinion. Like, basically, they were being propped by free money all that time, right? And I saw the same thing happening with Uber and Lyft. Like, Uber and Lyft are going public. It's like, guys, you don't make money. You've never made money. Heck, you've been very honest about not making money. And I think they were always honest about not making money because they knew the day would come when they would no longer get free money. They would not be given money anymore. They would have to go public to keep funding their operations, and as such, they don't want there to be any surprises that, hey, we lose money. But the story has been that they are turning it around. Now, what's interesting is that yesterday, Lyft reported, well, or the day before, depending when you watch this, Lyft reported that they had also lost money. However, their losses had shrunk and their growth had gone up. So Wall Street basically favored them and said, hey, good job, guys, until they realized that the stocks were going to get unlocked. Then they were a little bit less forgiving at that point. However, Uber is in some serious trouble right now because they have posted the headline, it says it right there. Uber posts 5.2 billion loss and slowest ever growth rate. Uber went in the exact opposite direction of Lyft. Uber lost more money and their growth sunk, whereas Lyft lost less money and their growth went up. So if you want my personal opinion on who Wall Street's going to be calling their darling for rideshare, it's going to be Lyft within the next few months until they realize Lyft losses are going to grow again. Like this closing of the losses, it's not going to be forever. So, and how did people react to the stock? Ooh, look at that. Yeah, 6%. Now it's kind of gone back up a little bit more because when a tech company dips like that, there's always some people. But as you can see, it's trailing down again, and after hours closing at $40.30. But let's look at this real quick. So Uber set 2 dubious quarterly records on Thursday as it reported its results. Its largest ever loss exceeding $5 billion and its slowest ever revenue growth. And you know, that loss it cannot be stressed how big that is. I think the most I've ever reported a loss for Uber was $4.4 billion. In fact, that's kind of what I predicted. I predicted the losses would be somewhere between $3.5 and $4.4 billion. And they exceeded the expectations that, and they lost $5 billion, over $5 billion. And I couldn't believe it. It was like, wow. I mean, this is why people were fired from Uber, folks. This is why they knew this was coming, and they need to start like firing people and cutting costs so that their losses are growing, so that they can try to contain them a little. But no, it's getting, that's a record. That is record losses for this company. So anyway, the double whammy immediately renewed questions about the prospects for the company, the world's biggest ride-hailing business. Uber has been dogged by concerns about sluggish sales and whether it can make money, worries that were compounded by a disappointing initial public offering in May. For the second quarter, Uber said it lost $5.2 billion, the largest loss since it began disclosing limited financial data in 2017. A majority of that, about $3.9 billion, was caused by stock-based compensation that Uber paid its employees after its IPO. Now, I don't know exactly what that means. Maybe it's bonuses. I mean, I'm assuming it's not that the stock was sold. I don't know exactly what that is. Excluding that one-time expense, which you'd think would have showed up at their first earnings report, honestly, Uber lost $1.3 billion, or nearly twice the $878 million that it lost a year earlier. On that same basis and excluding other costs, the company said it expected to lose $3 billion to $3.2 billion this year. Now that's being extremely generous, because here's the thing. Uber, as long as I've been commenting on this company, and whenever I've been talking about their losses, so to speak, has pretty much lost between $2.8 to $4.4 billion every 3 months. This $5 billion, this $5.2 billion, this was lost in 3 months, about 90 days, maybe give or take some, depending on how the quarter goes. And they do it every 3 months. So here's the thing, that $3.2 billion, I'd double it. I mean, I would, if I were the stockholders, and I'm not giving financial advice, this is just me dealing with this company, don't be too surprised if they tack on another $7 billion in loss before the end of the year. Revenue grew to $3.1 billion, up 14% from a year ago. Yeah, not that it's doing them any good. Look, you know, they still have the losses. The slowest quarterly growth rate Uber has ever disclosed. Dara Khosrowshahi said, "We think that 2019 will be our peak investment year." Well, I guess so, because you're firing people. "We want to make sure that the kind of growth we have is healthy growth. There is nothing about your company that has been healthy in terms of its growth." He said there were positives. Uber's bookings, the money it gets from rides and deliveries before paying commissions to drivers, rose 31% from a year ago. The company also added customers totaling more than 100 million monthly active riders for the first time. Yeah, but when you're losing money on 100 million, you know, anyway. The results continue to cast a shadow over Uber, sending its stock falling in after-hours trading. The company, whose growth once rose like a rocket ship as it upended traditional transportation and barreled into markets around the world, was expected to be valued at about $120 billion at its IPO. But Uber dropped below its $45 offering price on its first day of trading and has only briefly risen above that share price since. Mr. Khosrowshahi has been criticized for the way Uber went public and has faced questions about how he intends to revive growth. He hasn't. I personally believe he doesn't have any plan on how to revive growth. Uber's a verb. A verb. Do you know what that means? Do you know the power of your brand becoming a verb? People don't, like, when the internet started for me, people used to say, search the internet. And you would go to like Yahoo or Ask Jeeves. And after one point, it's like, what do people say now? They say, Google it. It doesn't even matter if you use Bing or something. They say, Google it. That's how powerful Google is. When you go to a restaurant and you want a cola, do you ask for a cola? No, you ask for a Coke. And, you know, that's why people joke that say Pepsi's slogan name should be, is Pepsi okay? See, I do the difference. I actually ask for Pepsi at the restaurants, but you ask for Coke. And I remember watching a speech by Barack Obama one year, and I forgot exactly what the speech was about. And this was when I knew that Microsoft had definitely become big in the video game market. When Barack Obama was like, we've got to tell the kids to turn off the Xbox. Not Nintendo, not PlayStation, not Sega. He said Xbox. For a brief moment in time, the Xbox was synonymous with video games. Uber is synonymous with rideshare. They don't say call a Lyft, they say Uber home. Uber home. It is almost impossible to grow from that. You have taken over the general consensus that you are rideshare. And you want to grow because you're not profitable. That's a scary thought. And if you were and as an investor who, again, totally bought this stock as a vanity stock, not for something I actually expected to make money off of, this should scare you. What we're looking for is evidence that the company can re-accelerate revenue growth after the last few quarters, said Tom White, a senior vice president at the financial firm D.A. Davidson. The ride-hailing industry has faced scrutiny in recent months for the way its businesses burn money with no imminent likelihood of profits. Companies must constantly spend freely for incentives to attract passengers and drivers and to fend off competition. And you know, why is that? Why do we need to do that? I mean, I understand why Uber doesn't want to keep drivers around. It's like, well, we want to keep lowering their rates, and, you know, a new driver doesn't complain about the rates like an old driver does. I understand that. However, when you look at how much money has been spent on recruiting drivers and riders, it's like, well, maybe you should invest in your drivers long term, because what if some of these drivers who started 3, 4, 5 years ago were still doing it, and you didn't have to spend millions upon millions of dollars recruiting new ones? Oh, I think that's something the investors would have definitely liked, but who knows? Well, we can never know that again. Both Uber and its rival Lyft were questioned by investors this year about their business models as they prepared to list on the stock market. Oh, please say they shared some of our videos, some of the Uber Tubers videos. I would love to see them do that. Lyft has also reported a series of deep losses. This week, it said it lost $644.2 million in the second quarter, though it added that that it expected that amount to abate. Several months earlier, Lyft had also posted a particularly steep loss related to stock-based compensation payouts to its employees, which means if you're unlocking the stock, I guess they should be prepared for another one. You know, what's really interesting that they bring up Lyft is I kind of wonder, what if the earnings had been reversed? What if Uber released their earnings first and Wall Street reacted violently? And then Lyft showed up and it's like, hey, our losses are shrinking and our growth is going up. Would Lyft's stock have actually done better that day? I can't help but wonder that. Like many technology startups, I don't know why I struggle with that. That's my stutter right there. Uber and Lyft recruited employees with stock options they said could make the workers wealthy when the companies went public. The costs of that practice have now materialized. Uber said it projected spending $450 million to $500 million on stock-based compensation for the third quarter. Mr. Karashahi has been working to cut costs and shift management. In June, he ousted 2 top executives, the chief operating officer and the chief marketing officer. That might be the first confirmation we have that they were fired to save money. Last month, he laid off a third of the marketing staff, or about 400 people, which he said during an earnings call was necessary to speed up the team's decision-making. The board members have also, 3 board members have also stepped down since Uber's IPO. Interestingly, Travis Kalanick is not one of them, from what I understand. The board changes have been led by the company's chairman, Ron Sugar. That's an unfortunate name. It almost sounds like a pimp. Mr. Karashahi said on Thursday. He added that they were part of the natural shift after a public offering. This is a different Uber, he said in the interview. No, it's not. I get to spend more time inherently with our employees. What I'm insisting on is excellent. No, you're not. No, you're not. If you were insisting on excellent execution, you'd want to keep your qualified drivers around. But with the deactivation policy not changing, yeah, that's not happening. Mr. Karashahi said Uber, which had been competing with Lyft by offering heavily discounted rides to lure riders, has seen that price war subside. The competitive environment, which got worse in the second half of last year, is progressively improving now. Yeah, that needs to be explored a little bit because it's like, it almost seems like there might be some price fixing there at that point. Because Uber and Lyft has always lowered rates together, they've made changes together, and now it's like, oh, all of a sudden, Lyft one day says, we're not going to get into a price war anymore. Then Uber the next day is like, we're not getting into a price war either. Awfully fishy, don't you think? Just a random thought I have. Not saying anything, not trying to suggest anything, just, it's just interesting. Although Uber has relaxed its discount for rides, the food delivery business is still highly competitive, and the company plans to invest more aggressively in that area, he said. Well, so much for being the peak investment year. Uber's food delivery business, Uber Eats, more than doubled its number of monthly customers in the quarter. Uber, which aspires to become an Amazon-like store for all forms of transportation, is also investing in the development of autonomous car, public transit deals, the expansion of its bicycle and scooter business, and its freight delivery platform, and trains. I actually didn't get around to talking about that. Maybe I still will next week. I don't know. If I'm feeling like doing a live stream Sunday, maybe we'll talk about that. But yeah, Uber is also working on trains. So yeah, they definitely want to be in everything. The company plans to roll out more options for shared rides, such as carpooling and public transit features. Boo, freaking who, I don't care. Nobody cares about the carpooling. The employment status of ride-hailing drivers remains an issue for Uber. Anyway. They talk about the AB5, and he says, we do believe there can be a win-win scenario here. Yeah, you can pay the drivers more. You can raise the prices. You can act like a real business. You can become profitable. So yeah, some people. So here's the thing, folks. Yeah, I lost money on this stock. I fully expect to lose money on this stock. Again, when I bought the stock, it was not because I was investing in Uber. It's just so that I can legitimately complain about that. And hey, as someone who's invested in Uber, wake the F up. Wake up. You can't talk your way out of this one. The chickens have come home to roost. This is not as complicated as you want it to sound like. You want to have a good business, here's what you do. Pay the drivers better. You pay them better and you treat them right and you put a cap on the vehicles, you can save millions of dollars in recruitment fees and bonuses. And step number 2, you charge the service what it's actually worth. Yeah, you're gonna cost the same as a taxi, maybe even a little more. However, the taxi companies cannot compete with your app, which is convenient and simple to use. And then the third thing, you have got to stop wasting money in the autonomous vehicles. You know what you have to focus on? Forget the autonomous vehicles. If they happen one day, partner with Tesla, General Motors, someone to that effect, and say, hey, we have a brand that people trust. You have cars, we have a brand, lend us your cars and we will split the cost 50-50. That's how you do it. In my opinion, what do I know? I mean, I've just been running my own businesses for years and it worked out pretty well for me. Granted, I know it's a different type of thing, but yeah, no, Uber. This right here, I think is going to keep going down and down and down. And yes, I obviously will lose money. That's fine. But yeah, 5.2 billion loss. That's where we're at. Holy cow, I can't believe it. So anyway, this video ended up being a lot longer than I expected. So we're going to end it here. I would like to hear your thoughts on this, whether you're an investor, not an investor. I'd like to know what you think about this. Comment below. Like, favorite, share, subscribe. If you enjoy my videos, consider becoming a Patreon member. It's totally optional, of course, but even as little as $1 a month goes a long way, helping this channel run smoothly, and you get access to my Patreon's exclusive blog. If gas prices are getting just a little down, check out the Get Upside app below. It's totally free, but you get cash back on every gas purchase. If you want more content from me that's not rideshare related, check out my other channels, Kevin T. Rodriguez, the Apptrepreneur Vlogs, and Autograph Hound. And finally, if you want to talk to me or other fellow rideshare drivers, check us out at the Apptrepreneur Hangouts. And as always, flame responsibly. Have a good one.